Those inflation fears are really settling in, and the markets are responding. Canadian stocks had their worst drop since 2020. And globally, global stocks are on track for their worst week since the start of the pandemic. Scott is here with the explanation for all of that. What's going on today, Scott?
Well, good morning, Heather. If you could call that after a real decisively down day for the markets yesterday. We've been talking about this all week long, rising interest rates, rising inflation, and this has got the markets really rattled, and we saw it yet again on Thursday's trading. I thought we'd take a look at some of the particulars to give us a real milestone as far as where we're at. For example, the TSX fell at just over 607 points to right the 19,000 level, and that at that level, that's the lowest level it's been in 14 months, going back since to April 2021. All subsectors were down, all 11 of them, from energy to healthcare, to the banks, to finances, to the downside. So this means anybody that was invested purely in equities or equity mutual funds basically is flatlined going back 14 months. Now, it's the same scenario down in the U.S. Dow Jones is down to the 30,000 level for the first time since January 2021. So this means basically equity from that time has been wiped out of the markets. Also, the S&P 500, a more broad measurement of the U.S. markets, down 123 points, 3%, and that's the worst single day as well, going back a couple of years. And the world markets, as you mentioned as well, Heather, they are on track for their worst week going back to the beginning of the pandemic. So that shows you how seriously these markets are being roiled. And we're looking at the reasons why. We saw that 75 basis point rate hike from the U.S. Federal Reserve on Wednesday, and that really got things going as far as the markets paying attention. We saw from yesterday the Swiss National Bank, the Bank of England also increased their interest rates, and the Bank of Canada also expected another supersized rate. 75 basis points is expected when they next meet July 13. And these markets are reacting, and one interesting reaction here as well is the Canadian dollar is pulling back as well, and that signals that there's a lot of currency traders out there worried that these aggressive rate hikes, whether it's the U.S. Federal Reserve or the Bank of Canada, could in fact cool the economy to the point of creating a recession. Nobody likes to talk about that, so that's why these markets are really worried as far as that recessionary word, but these markets clearly are a red warning light that are flashing. A lot of people now paying attention.
That's really interesting, because we got that report from the World Bank earlier this month saying that many countries, recession will be hard to avoid. So for this reason, we watch very closely with you, Scott. Thank you very much. Appreciate it.